Okay, thank you for joining everybody on this live session today. So it's 1:30 p.m. So it's Wednesday the 19th of June. Just 2 moments and we'll get started. Okay. Okay, perfect. So I was just monitoring something. So to start off then, we're going to go over the DXY and then we're going to roll on to GBP JPY, GBP USD and USD CAD. So beginning on the dollar, we can see that on the 4-hour time frame. Thank you, Peter, for confirming that. On the 4-hour time frame, this area has been used quite nicely for that catalyst for a pullback. Just that bullish candle there before that bearish move. Price is revisited, actually swept that high as well. And looking like we're having some sort of corrective behavior back down into here. Obviously, that is the area which I favour because of that discount, 4-hour imbalance. And then from here, if we start to see bullish signs, then we could continue higher on the dollar. So that's what I'm looking at the moment. Obviously, just going over that 4-hour structure once more, coming out of this high. This was a daily imbalance that price tapped into. If we just go to the daily, just to recap, that area right there, price went into that and then started to go bearish on the 4-hour. High, low, lower, high, lower, low. Price had that initial break of structure on the 4-hour. Okay, this is why we keep in mind the fact that if we break structure once, it's not a confirmation that the structure is going to change. It's the first sign price is going to change. So this was the first sign that price could go bullish, and then look what happened. It went back to bearish. So this was the high, low, lower high, lower low, lower high, lower low. Another break of structure to the upside, breaking this high, higher low, down into this daily demand area. So if I go to the daily, you'll see that. That daily candle there, the bearish candle before the bullish move. Price reacted from that really nicely. And then price has obviously made another higher high. So this is why I'm saying we could come down into here to then come higher. So that's what I'm looking at on the dollar. If we go bearish, then I'll need to see that low be taken, first of all. But until that point comes, I am bullish at the moment on the dollar. Obviously, I'm saying it's going to come down to here, or it could come down to here. But overall, I do think it could go up if this low can remain intact. So moving on to pound yen. So on the daily time frame, if we just recap, so yesterday I was speaking about this area right here. Okay, this area right here. I said that if we could close, meaning yesterday, if we could close above this high or this line, these two bodies, then we could see higher prices. If we zoom right in, you can see price did in fact close above that. Just there, look. Giving us a hint that the momentum is still to the upside. And you can see today's candle made the low. And then obviously we are going up. So that's that. On the 4-hour, just to highlight the levels in which I'm looking at for a pullback. If I can get into a buy position, nothing's changed. I'm still looking for that area right there, which is a daily level of support. Those daily bodies. 199,684 is what I'm looking at. On the 4 hour, that of course is within the discount of that leg to the upside. Also aligns with the Fibonacci 61.8% around that area, which is really nice. So we'll have to see what happens with this. We could get a reaction from here. So price is being extended to the upside. We could get a reaction from here, causing price to have a pullback. So we'll have to see with that. Other than that, that's pretty much it. On the 1 hour, obviously we've got this 1 hour bullish structure as well. Low, high, higher low, higher high. Same thing on the 4 hour, if we recall. This was the low, high, higher low, higher high. And obviously on the daily as well, is still bullish in terms of structure. From these lows, low, high, higher low, higher high, higher low, higher high, higher low, and higher high, because we've closed above that high right there with that specific candle there. So from a daily standpoint, that's the daily leg, but we still could have ripple effects, sort of internal market structure within that, which you can see we are doing. So we've got that bullish structure right there. Is respecting these daily levels of support. Two bodies, price comes into there and moves away. So that's why I'm expecting that right there. You can see I've got an alert on that line. So if and when price decides to retrace into that, then I'm going to be monitoring the markets for a entry. All right. So that's GJ. Let's move on to GU. So GBP USD. Price is moving up as anticipated. We were saying about ideally we want to see a pullback before taking that to the downside, because I do really favor at this point in time price to come down into here. But this is why I've got this alert on these two bodies of this two daily candles, because if price can pull back into there, give an entry, this could be a really nice short opportunity for GU. In terms of the daily as well, obviously we've respected those bodies. I wasn't interested in buying from here though, because that wasn't within a discount of any leg. So a major part of my trading plan is to buy within a discount and sell within a premium. So although there was actually a confirmation to go long from here, all of the tick boxes were not ticked. So I'm not going to take a trade that doesn't tick all my tick boxes. So that's that. Going on the weekly, if we just have a recap on the weekly time frame. This bearish candle coming out of this high last week, tapped into there and then closed bearish. What we could potentially react from once more is this. Be interesting to see what we actually do at this point. So I'm just going to label this. So that those are just weekly bodies right there. Going to the 4 hour, we can see that we are fairly close to reaching that. But even that, I wouldn't want to short from there because it doesn't align within a premium of that leg to the downside. This is why I do favour, if I am to get in a short, I want it to come up higher. Until then, price can do what it wants to, basically. Let's take that off. One thing we can also recognize is this structure, which I'm going to put onto here. So we've got a low, high, higher low, and we can't call that the higher high just yet. Well, it is a higher high, we know that, but what I mean is I can't just drag that to there because it could come higher, at which point I'll be dragging that higher. But let's just say that is the high that prints temporarily to then come back. Could be a nice opportunity to come back into this 50%, this 61.8% region to then take it higher, maybe to that area. So let's have a look within the discount of this leg. Let's just put that on there for argument's sake. So let's have a look within a discount what we have. Let's just make sure that's visible on the daily. Okay. So what we have is that right there, which is going straight through that area. So that's interesting to see. So that's just those two bodies. You can even put it to there as well. Either way, or either one would be valid, in my opinion, because that's been respected multiple times, as has that, and they both align within the 50 and 618 area. On the 4 hour, I wouldn't want to mark on any 4 hour areas now that we've got the daily, because that's just going to over congest the charts, in my opinion. So what I'm now going to do is actually put an alert on that daily level, that blue level. So that's 1.27009. Okay, so sort of a round number there as well, which is good to see. Okay, and we've even got that there as well, if we did want to come down lower to retest that once more. So that could be a nice setup, which also aligns with pound yen going up. So as I've said, these are correlated. They're not correlated all of the time, but in terms of the pound itself, because obviously one is pound yen and one is pound dollar, if the pound is rising, then one or the other could be setting up or giving a hint to what the other could do. And this is something I've noticed during my time of trading these two currency pairs, GJ and GU. So that's pretty much it. On the hourly time frame, it's obviously even more visible. What I am going to do is just highlight that area. Then we can get rid of the Fibonacci. Before I get rid of the Fibonacci, let's just have a look at any extension alignments. Well, the fact that we've got that there, that could be a nice opportunity to ride that into that daily level. Basically a 100 pip move. So that's one to monitor. We'll come back to that if price does visit that area. Okay. So that's that. Let's have a look at USD CAD. So USD CAD actually put out a buy position this morning for our members. It is running at a slight loss at the moment, but the stop loss is down here, and I'll explain why. But first of all, let's just zoom out. Okay. So on the monthly, actually, let's go all the way to the 12 month. So on the 12 month, if we remember, this is yearly resistance. Okay, yearly resistance. Two bodies, the close, the open of these candles right here. This was 2015, 2016. Price has used that in 2020, 2022, 2023, and obviously now 2024. So we've used this area, or price is struggling to go above this area. It's probably a better way to say it. For 1, 2, 3, potentially 4 years, definitely 3 years. Obviously now is the 4th year that price has reacted from it. Okay, just looking at the wicks. Obviously this is a yearly time frame. Going down into the monthly. So obviously with that in mind, the higher time frame is always going to prevail, meaning that the higher time frame is always going to have more weight to it than the lower time frames. Another area right there on the yearly, look at that. Two bodies, price comes down, uses it as support and moves away. Okay, so yearly support there. If we now go down into the monthly, just paying attention to that there, what we just spoke about. On the monthly, that looks a little bit confusing because price comes up, comes down. You don't really know what it's going to do. Can it come lower? But as you've seen, on the 12 month, we can see that it's clearly a level of support. And we've even got one there if we want to extend that. Down into there, look. A yearly support, two bodies. Breakthrough, simple support and resistance. two bodies, breakthrough, comes back down to retest in 2017. 2020, we react from this resistance, yearly resistance, paying attention to the thicker red lines. Price comes down back in 2021 to this original area and moves away. So we can see that they can be used not just once, not just twice, but sometimes even 3 or 4 times. So again, going down into the monthly, you can see, right, okay, a bit more clarity now in terms of what actually happened. Because again, on a monthly perspective, it's just up and down, choppiness, sideways. Is it going to continue lower? What's its next move? Blah, blah, blah. Okay. Now what we can sort of understand is the fact that we've tapped into this yearly resistance, the 4th year in a row. Okay. If we zoom on the exact month that it tapped into, so it's obviously 2024, right? April 2024, you can see that candle there, look. That candle there, obviously the beginning of 2024 was down here. April, tapped into it, looking at that candle closure, just kissed it and closed below. Following month was a bearish month. Okay. Then what price has done is it's created its own monthly resistance coming off the back of this yearly resistance right there. So two bodies bringing that through. Obviously, what's price done on this month? What we can see, well, it's gone up, tapped this level of resistance, comes back down. So we're now here, right? This could be a very big hint as to what price could want to do next month or even the following month, i.e. potentially come down into here. Yeah. We've got this weekly imbalance to contend with to the lows. This is something very, very important to keep in mind. This could take, obviously this is a monthly time frame, right? This weekly imbalance was created in January. Let me just double check. Yeah, January. The first week of January. The first week of this year. It's had 1, 2, 3, 4, 5, 6 candles. Obviously 6 months. We are in the 6th month of the year. We all know that. To come up to these highs, it could do the same thing coming down. So we could have potentially 6 months of bearish price action coming down into there. It could be 1 month. It could be 2 months. It could be 3 months. Nobody knows, obviously. But that's just something to keep in mind, that this year printed this weekly imbalance. So, and you know, understanding where we're sort of tapping our head onto, sort of bumping our head, the price struggling to go above that area. And I've just gathered all of this information, and we've not even gone down to the daily, 4 hour, etc. So this is why it's very important to just go down step by step and just get a narrative in your brain as to what could happen. So that's the monthly. You can see I've got a weekly support on there. We've got monthly areas down here as well. Two bodies. Again, you can see these areas being respected really nicely. So that's that. Let's go into the weekly. So on the weekly time frame, let's just make this visible on the weekly. That's up there. Look, price comes, sort of moves away from there, takes a few weeks. So obviously April, as we said, spiked into the yearly resistance. Then we have 1, 2, 3, 4, 5, 6, 7, 8. We're on the 9th week now of this sort of sideways price action coming off of this. This bullish candle here, yes, price could go higher, but this could just be a false sort of move to the upside to kind of trap buyers into the market. I mean, I know I've just said I've entered a buy, but I'll explain the reason why. I'm not expecting to reach higher highs or anything like that. It was sort of an internal structure play, which I'll explain. But overall, yeah, like I said, that could be a false move to the upside. Price has come back into that monthly resistance, which is just there, just going back to the monthly, just to recap, it wicked into there. So that could have just been a move to drive price to that area for price to then potentially continue to the downside. What we will have printed as well, if we can print something like this, this will also be a bearish 3-pin pattern on the weekly. We've had one coming out of this yearly resistance as well, which is quite important to note, in my opinion. Why is that? Because the 3-pin pattern is a indication that price wants to reverse. Okay, so it's a candlestick pattern basically. That's something you can back test, look over. It doesn't work 100% of the time. Nothing does within the markets. We all know that. But it gives us a fairly decent hint as to what could potentially happen. So going into the price action right here then. On the weekly, as we said about in the previous live sessions, yesterday, the day before, even last week, I'm pretty sure as well. But this is what we spiked into last week, and we had that reaction coming off. Other than that, we've got this weekly support down in here, which price could be magnetized into, given the fact that what we're actually coming out of, that higher time frame area. Because this could just be something like this. This could just be something like this. Take that low. Potentially come down into there then. Okay. Going down into the daily, let me explain the buy position that we are currently in and that I'm currently in. So what price did is obviously it formed this bullish price action, and this is the narrative of what the buy trade was based off of. And if it hits stop loss, it hits stop loss. Okay. The important thing to know is and understand is this is an area at which price could be reached. So if we do start to break the structure points, I'm going to be looking for a sell, at which point that'll be a phenomenal opportunity to take it down into there, sort of medium to long term. So what price wicked into on Wednesday, so literally last week, Wednesday the 12th of June, was this area right here. And what I was paying attention to was yesterday's candle wicked into it again, and it closed above it or on it. It didn't close below it. So this was number one reason why I decided to go long from here. Reason number two was obviously the fact that we're bullish in terms of this price action. If we then go to the 4-hour time frame, if we go to the 4-hour, you can see that from this low to that high, this daily level aligned with the 61.8%, literally to the T. Yeah, it's literally on the 61.8%. So that's another reason. And obviously reason number 3 or 4 was the fact that we had a 3-pin pattern coming out of here on the 30-minute time frame. So my entry was just there. Stop below here. So we're still in the trade. Had a 21 pip stop loss, going for a 1.76 risk to reward. It's not the highest risk to reward, but the trade was there, so I decided to take it. And the TP is this right here. So this 4-hour sort of order block, you could call it. This is just an area which I do like to take profits out of the market when I'm trading this way, because these areas can be used. You can see that area was used once, came up nearly to it again, and this was the buy position from today. So so yesterday, or sort of Monday, yeah, it was yesterday there, look. A good opportunity to buy this would have been from down here, but the reason why I didn't is because of the time. Look at the time, that's 1 a.m. That would have been a textbook setup. So realistically, this is what I would have been after this. So again, 30-minute free pin. I'm paying attention to that one, by the way. 1, 2, 3. Why am I paying attention to that one? Because it's the London session. So 7:30 in the morning. Obviously, this one was Asia session, so I didn't take it. But it would have been textbook setup if it would have been in London session. And then take profit would have been here. Okay. Because the key is with these, I'm not going exactly to the area. That's why that specific TP is just below there. I always like to go just a few pips shy, but that would have hit TP for a 1.8. So that was the trade on there. And also this was a position that we had marked on as well. This was coming out of the weekly area. This is something we've already discussed, but let's go through it one more time. Where were we? Weekly support. This was coming out of this weekly zone here. So if I just make that visible on the minutes, so we go to the 30-minute, there was another entry right there. Coming off of that weekly support grid. 1, 2, 3. That's the entry. Stop below the low. Same thing there. So why was I targeting that there? Because if I go to the 4 hour, let me just make this visible on the 4 hour. If I go to the 4 hour time frame, yeah, I would have been targeting this 4 hour candle at the high, the body right there. You can see that would have hit TP as well. So these are the concepts that that we're rolling with from now on, for myself anyway. So I hope that made sense. Obviously, like I said, if we hit stop loss, it hits stop loss, at which point I'm going to be looking for this low to be taken. If that then happens, then I'm going to be looking for a short opportunity, because at that point, then this would be bearish structure. So that would be the high, the low, lower high, and then obviously if that low is then taken, then that would be the lower low. At which point I'd bring my Fibonacci from this low to wherever the low decides to print. Wait for a pullback and go short. Yeah. So, and that would make more sense, if I'm being 100% honest, from a higher time frame standpoint, based on what we've just discussed from the 12-month, the monthly, and the weekly, where we're coming out of. If I just make that yearly resistance visible on the 4 hour and the daily, just a moment. If I then go back to the 4 hour, that's all the way up there. But as we said, this could just be a pullback for lower prices to take these lows out. And all of this liquidity, all of that, sitting above this weekly imbalance. So it does make sense. It really does. So this is something I'm going to be keeping a close eye on, a real close eye on. So fear not if we reach stop loss. It's not the end of the world. This is why it's a risk to reward game. It really is. But that's pretty much it. That wraps this live session up. Just want to say thank you for everyone that tuned in. If you've got any questions, comments, suggestions, feel free to put them in the comments or in the Discord group with our members. Until then, thank you for watching, and I'll see you in the second live session of this afternoon at 3:30 p.m. So thank you guys. Take care. Bye-bye.